Perfect. So perfect. So let's go. That is for what? Conservative. Now let's say I want to do this one aggressively now. And I still want to engage with risk management. Because even though you're doing aggressively, so I've already explained aggressive self in itself. So I want to do aggressive now. If you are doing aggressive, you will be working with your head cell. Make sure you are reaching more or less. As if you are reaching 25 pips, and you can reach, we want to reach was 25 weeks again. Separate it. Access to one standard lot size, and then this. So whenever you are reaching high, you're able to tame your Excel. Now your Excel is high, but you should tame your risks. That's my point here now. Do you understand me, sir? I come in. Let me say that again. Whenever you are reaching high, you must be able to tame your. And whenever you have an high Excel, most especially if your trade is have a good long Excel, it's not even good for trading. If you have long Excel with 1:1, it's not good to pick that trade. Except if you have a ratio, this ratio 3, ratio 2, ratio 4, then you cannot consider it. But this Excel is long, and yet the ratio is what ratio.
Your voice is speaking.
Okay, if the risk reward ratio is 1:1 and the Excel is long, not advisable to always take such trade. But if the risk reward ratio is 1:3 or 1:4, even though your Excel is long, not for 3 or 40, you are still it will cover up for you. So whenever you are risking high, you must be able to tame up your Excel. And whenever your Excel is high, you must be able to reduce your risk, because if both are on the high side, you are at a risk, my brother. Let's do that. Let's do. Let's say I'm using 40%. I'm using 30%. And then
40%.
30% as well. So let's calculate how much. I'll lose $12. And I'll be able to use one standard lot size. Let's now say I'm using 40%. And then I'm using 40% as well. I'm using 40% Excel. I'll use one standard lot size, same thing, and I'll lose $400. But if I pick two trades, I'll lose $800 already. The anyone I pick it, I'll go this account. Can you see? So it's simple that anybody can always come to this calculator and put it there. How much I want to risk? How much I want to risk? Can I lose this money at once? Will it pay me, or I can let it go? I'm going to lose $400 from this 1K. Am I cool with it? That's yourself. I always tell people that if it's not what you can, if it's not a money you don't want to let go, then ask yourself, what is the risk I want to take for this? Ask the risk first before the profit. But many newbies, how can I make this money? I want to make, because of professional guys will show you that I flew 1K to 500,000. I flew this guys are professional. They don't blow tire. No, learn their lesson. You never blow, you never even said anything. You thought it's just like that too. You can come here and come and flee. You have to flee 1K to $100, $1 million. Oh, it's okay. To them now, that 1K, they can let go of it. But to you, that 1K that your last car for your account, you want. So people are just funny, man. Just funny. You can't just put yourself. You can't. You shouldn't. Someone else $100 is another person's money. Another person's money for the whole week. Like I said, $100 sometimes, $100, $500, I risk them. Philip, and sometimes goes my way. Most times. But some people may not be able to. That is it. Money is relative. It's relative. So you shouldn't do what you've seen on social media or oppression or whatever stops. Try to grow to that stature first before you imitate. Am I talking to somebody?
Yes, sir. Yes, sir.
So that is for that. So it really depends on what you are willing to take first before the profit you want to make. What you are willing to take for the profit you want to make. If you can afford to lose $400 from this space and you will not be moved, then you can go ahead and risk 40% and 40 loss side. Yes, but that doesn't mean that this loss should be 40 loss. If you see that it is at a market structure of 30, you can put it at 30, 25. That doesn't mean you will be 40. That's it. It's also reduce. It also reduce this one. You know, say we give more room for lot size. Let's reduce it now. We have more room for this lot size now. Let's reduce it. We say we have more room for lot size. Let's see. Can you see? But what the amount of number you're losing. Note that what your risk is determinant of what you lose. Your stop loss is also a function of higher lot size to use. I repeat, let me say that again. Do you get me, sir? Let me say that again. Note something for sure that your risk, even your risk is what is a factor of what you want to lose. If you like risk 500, 500, if you leave $50, you lose $500. If you like use 10 lot size, use 11, use 0.5, 0.5 or 7 or 6 SL. This SL is a factor of what? It's just giving you a factor determinant to give you more push to make more money with your stand lot size. Am I talking to somebody?
Yes, sir.
Just what is a factor of this. XL is a factor of stand, XL, factor of XL. But different meaning. Am I talking? This percentage is a factor of amount risk, but different meaning. This one is a factor of this. If you risk this, you lose this. If you risk this, this is what you will be able to use, access you will be able to use. Am I talking to somebody?
Yes, sir. Yes, sir.
So know that XL is a factor of XL. Stop loss is a factor of standard lots to use. If it's high, this one will reduce. If it's low, you have the tendency to increase your standard lot size. Good. So that is how it works. Also, this also have a relationship as well. This one has a relationship with this one, has a relationship with this one, and this also has what? A relationship. Do you understand me, sir?
Yes, sir.
Not to percent out of there for you so you can earn. This and this also have a relationship. In the case where you say you want to use, averagely, everybody use 20 or 30 pips per size. And then you should know that, okay, let me know, I want to use 25%. If you do calculation, you'll see that you lose $250. Not bad. Four trades, 4 positions will take you away. I mean, 4 trade, take it away. You take the first trade, you have 0.80, let's say 0.880. You have 0.80 now. You can open 0.20 in 4 places. The first one trade went bad, you lose 250. Second one went bad, third one bad, you should take the fourth before you can blow this account. It's what? The standard lot SL of 30 pips. Now, if you are not trading aggressively, you can risk 50% at once. 50% at once. You have access
the money you got to lose.
You have access to lose what? 0.6. Are you understanding me, sir?
Yes, sir. Yes, sir.
That's aggressively. So if you know that this money you cannot. Yes, sir. You said what?
On the money you can afford to lose.
Exactly. That's the mindset of aggressive trading. Aggressive trading is meant for a mindset of this money. If I lose, I'm not going to cry. Say my family will cry. Say I know pay my students' school fees. Let me say my wife go home and say, you don't fuck up. You this follow me. Wait till the apple. Which of this I'm a beg. Oh yeah. Money. What is it?
I have a question, sir.
Yes, sir. Yes, sir.
If you are to start over again now,
okay.
After your training and everything, will you start trading with your money, or you trade demo, then maybe profit? How will you figure?
You have to start. Is it with the knowledge or without knowledge? I want to start
with the knowledge.
With knowledge. All over.
Yes, sir.
Will I go to demo or start trading?
Or profit or your money? How are you going to arrange it, sir?
I will divide it and see my strength first. If I have 1K to use, I can say, okay, let me buy profit let me set $500 for profit because I love diversification. It will help you to know your strength. Let me set aside $500 for profit and let me take $500. $500 I can use to buy at least. I can blow. I know I will blow them. So I'll just be buying them $50, $10, $40, $50, $80. At least I'll be access to buy at least up to 7. If I can trade 7 profit, at least 1, 2, 3 will give me experience. I'll be able to pass them out of it. But I know that the whole of $500 is for what? Is for what? The profit buying. I can buy the lowest profit. So I know that there's every tendency that I will blow this account because profit has some street rules that even though you are trading on yourself, you can make profit. Because the profit just begin to bang it as if you don't even know how to trade. Bang it anyhow. So there's crazy rules. So it comes to what? Blowing easily. Yeah, good. Most of them are crazy rules. Now, okay, let me set it up. And of course, the advantage of it is that they give you large rooms for account. Once you are able to pass, you can begin to make money from the large amount of money. Good. That's the advantage. So I will divide my 1K, 500. I will allocate 500 for what? For buying of firms. And I'll take $500 to be trading. That's if I see that's the money I have all my life. I can't even use I don't advise people to use all the money in your life. If this like I have 2K, okay, I say okay, 1K, I'll select 1K is out. But taking all the 2K and it's not done. It's a risky game, it's not done. I'm thinking it's not done. You hear someone said something. I haven't taken permission to mention his name. So I won't mention his name. He said he said to a student that, how do you notice that I've made money from this market, but you will never see me pack all my money I've made back to the market to say I want to double them. People like, and it's true. It's gambling, man. It's risky. Or I say it's risky. I'm saying it's risky. It's a risky game. There is loss and there's profit. Yes, if we accept it. Yeah. There's not what you will not see me what all the money I've made, I'll take it back. Rather, I will take a fraction and I will be stingy to the market. I said, for that fraction, I want to now double on the market. I see that sense, I see that wisdom. For example, the person has made on the K all over. He will not take from there, he will not get like 2K or 3K. He want to use that 3K to make 10K, to make 5K, to double it. And he will be able to double it. Why didn't he just use 100K since he can double to 200K? It's risky, my dear. That time, market can take it off. But if he's taking fraction, 3K, he can lost it. You take other 3K again, you need to make it back. That's how it is being done. So you don't use all of your life savings. It's not wise or prudent for a financial advice to use everything you have, inject into the market. You are wrong. That's foolishness. You are meant to bring out a fraction from that. From that, be traded. That's how that is. You are going to financing. You are going to financial this thing already. So that is how to financial management. That's how to manage your stock. If I have 2K all over and I'm all over and I have 2K in my account, I won't use all the 2K. Never. I can easily divide it by 2. I can easily divide it by 2. Okay, 500 for what? Since I know I have the knowledge already and I can easily make money. Okay, fine. 500 for allocate to buy as many as the blue at the buy them. The blue at the buy. And the blue at the buy. To buy 500K to do it. So the money I make, I can be injecting it into as profit for myself. Even the personal trading can be making me money. I'll be able to be along in the long run. I can even double if I wanted to 1K. Double if I wanted to 1K. Fine. So that is it. Any other questions, sir?
No question, sir. No question. You said you are going to send me the list of firm I can actually use, sir.
Yeah, I will. Okay, I will. I'll send you a link. Okay. Sorry, I'll send you a link. So that is for the aggressive. Aggressive trading must be what I'm willing to lose. So you just not come here, you not low amount of lot size you want to enter. Then you enter them. Pam, 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 pam. Mind you, you don't enter all of your stuff. Once market has not confirmed movement, it's risky low. It's risky low. Once you're so sure, everything is coming down, but you're so sure that this thing will go. That's when you can begin to add more positions. That's why you see positions or add more positions to it. And see, like me now, see, let me show you. I just show you an example now. I told you that I make this market from here. I started from here. I entered here, market goes and come back here. Then it gave me profit to this place. That's about 40 pips or so. From here, that's 90. And this is what 20, 25. That is what 45 pips or so. So I make it already. And market will be tested back to this point. I knew that it's still going on. So I was so sure after I took up my profit here, and I entered again freshly. It's just all my entries. Yeah, market keeps continuing till it came to news. I knew that this is coming. I knew I to push. And all this one I did, I need that enough because of news. Also, let me sound this thing. Whenever news is coming, market will not move. It will do as if like so that is saying automat, get set, get set, get set, get set. That's what market is doing. Get set. You want to doing get set, get set. So you keep consolidating. And until that news came, they were to push. So I knew the news is coming. So I came to my 1 hour. I was so sure that no, this news cannot stop here. I saw this double bottom here. It came to this what next cycle level. Then the second one too, double bottom, it should come to next cycle level for any move. So I knew that the move is not end over yet. So immediately you did a retest around this point. I saw another more entries. It's a new I loaded another new account. I loaded it on. And when news came through, do a flashback, I knew I'm not seeing a flashback because of what I saw the outcome. The outcome, I know a flashback. We just told that's what was purely red. Everything was red, which just shows what to buy, of course. But the going back was probably to catch some liquidity. So I knew it's catching some liquidity already. Then it went back and it was boosh. It gave us mass profit. I told you now. It's around here. You know, I saw this second one. It closes, I came at 2 already. Now let's came here and then test. That's it. I was so smart. So if you're smart as well, if you have no one to take it away, you will. So if you're not smart, you just see reverse of your hand again. Imagine from the back to entering again, back to square one. Right. It was, oh, don't take profit, you go to class. So that is it, guys. So that is another question. So that question
No question.
Make me to say that. So I know it will help you.
Question, yes, sir. No question, sir.
Okay, if there's not, that is for risk management. So I want you to go and do assignments on that. Go and do assignments on that. And then you also be able to teach your colleague on that whenever it's online. We should have a makeup class within the week. I will inform you guys. So let me quickly do analysis for the week. I think my case has opened. That's open yet. You never open yet. Let's do analysis for the week. Your peer, ba? Let's do this one first. My peer. I'm going to buy this.
My peer is not moving. My peer is not moving. It's not moving to my satisfaction.
Okay, we'll check it now. Let's see. We'll check it. Okay, let me see this pair first. Let's see this. Let's see AUDUSD. I'm going to like AUDUSD. I don't know. AUDUSD. You keep having the continuation year 3, 4, and this is one head. Okay, this one head. This is our buy sell here. We have a long trend line here. It's coming from what? Let's check. Let's see how it's coming from. Let me go to monthly. It's coming from, I think, 2000. Let's go to monthly. I do it, can you see? From 2000, can you see? From March 2000. Okay, good. And I think that's expected already. So let me stand this thing also. Once the market expects the trend line and it goes, the second time it's coming back to it, it might possibly break it out. Except that place is a strong zone that you have to do, because we do go and go before you break it out. If not, after the first touch, second touch, it might break it out. So I think that's at this point, almost to the trend line, but it go back. So let's see. Let's see. Don't forget this spot, which was what? A support level. First support here, support here, support here, support here. And you see, guys, that's our about 5. Maybe so.
Yes, sir.
Yeah, that's why we milk it. That's about 5. That's why the market's bought. You're always there. Sorry, a minute. Sorry. Okay, are you there, sir? Hello, are you there?
Yes, I'm here, sir. I'm here, sir.
So was a double top. It wake up and it's coming back. This market comes back to this point. And doesn't take away this point. If it wants to take away this point, you should be looking for a sell market. We have to wait for his reaction. Let me come to 1 hour and see. I'll be watching this here, right here now. If once it breaks, I wanted to buy around this point. Can you see that this is a what valid point that it keep buying? But if it breaks away these two, then there's nothing like buy again. Don't ever think of buying. Say once it takes away this, then we can now draw what? We can draw a new trend line. This is our trend line. We're looking for a trend line to connect. So once you take away this two, it should be what? It should be going downward. So what to do now is to what? Watch this place. You can do it. So I've done 1, 2, 3, 4. This might be the fourth that will break. So I'm seeing the possible break. It might be the fourth, but another break can still come back to this entry here. Let me see. Let me show if it will break indeed. It didn't do any correctional pattern. You know, I told you about alternative angle.
Yes, sir.
However, if so far I didn't do that, it might still come down to the entry. So I've already done my, let me read this. It might still come down to the entry. So what to do at this point is just to wait. What I would advise just of what? 1, 2, 3, 4, 5, 6. Be careful. Don't just think because their strong zones are expecting it want to buy. It's fine, but they are not what cycle levels, above cycle levels. As long as they're able to be cycle level, we can still be considered above cycle level. So it might still break. So the best thing to do at this point, I'll wait. If I see the market comes to this something around here where I bought already around here and giving me a confirmation for a further upward market move, I'll buy. But if it breaks it forcefully and takes away the keep yourself. Let's go to your what? Your peer. So if I'm to do that, to take that, I'll just wait. It's a patient of a thing. I won't take any action at that point because of what? I have a tendency for to break in on that market. Because that see the footfalls. See now. Sellers are in the market. See these footfalls. No this at all. Open. The Bible will say open. Open. Hey, now you see this first seller force. The next week will be first as well. Right, so you have to just wait and watch the market, whatever you want to do. I come to let's check your pair. We go to daily. Let's see what's going on. Oh, sweet. You're having a trend line here. That's already expected the trend line. Oh, I think I'm also make this one too. Why the news was coming? Because I knew it will bounce. So where is our trend line coming from? Let's check it. From what? 2002, September 2002. Okay. Good. And it has already expected it. So be expecting what? This is your daily. This is what? This is what? Our what? Okay. This is what our what? Trend line for sell. For sell. All this one are just AV. Now this is for sell. It expected our trend line here. It's buy because of what? It must have done double top. Trend line, cycle level, and then a bit of support resistance, but not really. That's why it bought. Let's see. That's why it bought. It's a strong trend line here. It's a strong one. That's why it bought. And this one too that is coming here, he has to buy. So I knew it already. That's why it bought. So I knew it also during the Fridays, during the Friday, send to the signal group, during the Friday, what's it called? During the Friday news, we make that this as well. Make it so much. That is not perfect. Let me draw it again. Okay, good. Yeah, good. This is first. I'm looking into the this is perfect. It's cutting each other. So this is it now. So it came back to this point. That's already done the buy. Came back to this. Don't forget what it took away this low. Not be so. Look at it
Yes,
here.
sir.
Lower, not be so. That thing I taught you, the structure, and I do what? Double top here. Break it out. We broke it at first. We tested. I put the structure there, the zone there. After the structure on that zone, it got breakout. After the breaking of this one, it came back to come and equal this one. So this market has to be very watchful, very, very careful. See now, he broke this one and came back and sent this out. In other words, this is what a small double top here to change, and it came back here. This trend line has told me what to do. If I saw this market on Friday, I will bought it massively because I already know what I'm seeing from experience. I mean, now I told you that. So this one, so it's bought here now. See now, it's forming another M pattern. You can see this one has come low and coming here. However, let's check again. Let's expand this one. Let's check 1 hour and see what.
How many minutes time is, sir?
What is it, sir?
How many minutes time frame is that, sir?
I mean, what 2 hours? That's 2 hours time frame. That's
okay.
2 hours. Yeah. So after he break here, he tested it. He now broke below it. He broke below it again. He tested it. He came back and he came and did double top here. From top, he came heavily to buy. This might be a change of structure for the market. This heavy buy. By talking somebody, but
yes,
you can't conclude yet. I told you that whenever you conclude when you buy is what when you do two buys. Lower low. So what? Are you there?
Yeah, yes, sir. Support and resistance. Like resistance and support you there.
Yeah, but you can't conclude that this is a buy because of what the huge buy that came equal this one here. But you have to conclude if a buy structure forms. That is to say, higher lower high, lower 2. Then you can draw a trend line alongside. Then you expect the third buy. That's it. So that's why you can conclude a buy right in this point. However, let's draw. There's no even places to put it there. You can't conclude. You can't conclude. So that's why Sunday trade is not always. You have to wait. Conclude yet. It came back to this place. You have to wait. But I'm still seeing, for me, the market to have rejected here, come back here. If you open a gap here, it will fill it before it can move. For me, I'm still seeing I'm seeing a waiting action on this market actually. Any rush decision. I saw a post today, which is very, 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 very crucial about Forex trading. It said what is the hardest way to make the surplus money? Am I talking? Hardest way to make the easiest money. Do you understand that, sir?
Of course, sir.
Aside from that, now say for every mistake, market as open up. For every mistake you make, you don't pay for with apologies. You pay with dollars. Kai. That's it. You pay with dollars, and people don't want to pay with dollars. I lost. You don't make mistake. You have to pay it. Oh, you lost. Your apology. I'm sorry. You don't do apology here. I'm sorry, sir. You don't do apology here. No, sorry for your boss. No, apologize to your mom and your dad. You don't apologize. You don't apologize here. You pay the price. You pay for the price. Once you make a mistake, and once you make an hurry, this thing, or you're greedy, or you're indisciplined, anything, you pay with it. So it's crazy, guys. It's crazy. For me, I would just say a wait on this action, a wait on this market, a wait. It's not clear buy or sell yet. It's a good wait. It's a good wait, actually. But it takes the market is what? A sell market. If you come back to this point, this cycle level, sell. You come back to this point, why do you actually sell? See this support turning towards resistance here. You come to this point, I'll be more confident to sell. I'll be more confident to sell because to sell back to this point, and then I want to can now go up. Then I cannot join this my trend line here. I will not join this my trend line here. I'll join it here. So the one that it will come back down here. It will go up here now. Let me check for you. Card. So all these things are just about, if you go up here now, it will come back here. I will not just join it with 1, 2. Maybe so. Maybe so.
Yes, sir.
Then 3.
Yes, sir.
Then it cannot come back here. Then cannot maintain buy market. They will know that what this structure has ended. It's not what the buy structure. That's how to trade. Nothing like that. It's just about technical tactics. Just that's it. But for me, on this market, I have to wait. That's why I have to wait. Patient is support of the game. But if it can come up, I will sell. If it come up, I will sell. I'll come up, I will sell. At that point, I will sell. So that is for your GU. So we should appear for the last one before I close up for today. Should appear, should I analyze? We should appear.
Let's do gold.
Okay. I don't know why everybody like gold.
I don't like gold though.
Okay.
Because I don't believe in quick money.
That's it though. That's it though. Everybody like me to have once fallen up on gold. God, my dear. Whoa. Let me trade what it's true. It's true. Let me trade what to make. I know we say let it go. So I've been a buy structure market. When it comes to this place, it's consolidated from year to year, then it broke to form another eye. Should have put another cycle every year, should have another cycle every year. Another cycle every year. Good. Yeah, good. So that's another cycle over there. So gold has been a buy. I think we also moved the buy in the VIP on Friday. We moved the buy as well. So this is a range that is wages. After wages, it did a little top here and it bought. I don't know. Then from there, it came back to this place. Then it buys and almost equal this one, they said. So let's go to the power and see it more clearly. This one is gone already. Let's take it off. It said it's gone over there already. Let's take it off. So let's check 4 hours.